So NIO stock has long been one of the most popular yet also one of the most volatile and controversial spec stocks out in the market, given that they typically trade for less than $5 a share, essentially making them a penny stock. And yet, the company has really big ambitions for the future in hopes of one day becoming a somewhat similar company to the likes of something like Tesla, except right now out in that Asian country that I'll just refer to as the C country because I've had several videos recently get demonetized that mention it. Anyway, that ridiculousness aside, through the lockdowns that were caused by the global health issue that started in that country, NEO stock had continued to crash. But as that country starts to reopen, there's newfound optimism that the company is finally starting to turn things around now. So in today's video, we're going to do a quick update on NIO's business to see how they've been doing so far, what the future looks like based off of some recent good news that's been reported about the company and the stock, and of course we'll also talk about that stock, and I'll let you know if I'm personally planning to buy it anytime soon myself. I hope you guys enjoy the video. Let's get started. What's up everyone, my name is Ale. Welcome back to my world of stocks. Okay, let's go ahead and start with just a quick recap on who NIO is and what they do, and then we'll jump straight into the stock and what I think the future holds for them. So like I said before, NIO is known for trying to be the C version of Tesla, and that's because they offer somewhat similar electric vehicle technologies for very competitive prices, as you would obviously expect for the C version of virtually any product in the world to be competitively priced. But this includes an in-car AI system, artificial intelligence system, called NOMI, a very impressive autonomous driving technology with NIO Pilot, in-home charging, a public charging network, a van service that goes out to you even if you happen to need a charge out on the road, and even battery swap locations where you can literally swap your battery out with a fully charged one in less than 5 minutes, which is something that not even Tesla offers. Now, when looking at their flagship vehicles, there's the big boy ES8, that's their largest SUV, sort of like the Model X version of like Tesla. And it seats up to 7 people and sells for somewhere in the 4 and 500,000 yuan range. For context, 500,000 yuan is around 70,000 US dollars, so that gives you kind of an idea of where the price kind of sits at. It also has excellent speed and range, although these figures are in kilometers and NEDC range. So if we convert them to miles and EPA, you're probably talking about a 0 to 60 speed of around 4.7 seconds. And to convert the NEDC to EPA, I just use this formula from Inside EVs that says to divide the range by 1.43, and that would give us an EPA in miles of a little over 250 miles of range. And obviously EPA is generally considered to be the more accurate measurement, but you know, these ranges could be a little off here. And I have seen estimates out there that put the EPA ranges for NIO's vehicles a little bit higher, so just kind of keep that in mind. But to put it all together, what you ultimately get is very strong performance from NIO's, although not quite as good as Tesla's, whose Model X Long Range Edition can do around 100 more miles of range, again using those estimates, and still comes in at a faster acceleration as well, although the trade-off is that it's significantly more expensive, as it starts at $85,000 and can go as high as over $100,000. And of course, those are US dollars. It's not it would have to be shipped into China. They're not building it out in China. Where it really starts to get interesting for NIO, though, is with their smaller SUVs that still offer very strong performance for even lower prices, which they currently have 2 of. One is the ES6 that barely was launched about a year ago, and when converted, it comes with more than 265 miles of range on 0 to 60 speed of about 4.5 seconds. And even the cheapest version comes with a dual motor and still only costs around $50,000, which is pretty impressive. However, for around that price, you can get the Tesla Model Y, at least here in the States, which actually comes with more range. Still, NIO would really argue that their upcoming EC6, which is even smaller than the ES6, will be the more competitive alternative to something like the Model Y, maybe even the Model 3, depending on what you're kind of looking at. This comes with a glass roof similar to Tesla's, has the same strong performance that you would expect from a NIO, and will likely cost even less than their other models, although they don't plan on releasing price information until later in the year when it gets closer to launch, so we can't officially say how much it would cost yet. But that's a basic summary of who NIO is and what they're doing, and of course I also gave you a little bit of a comparison to something that you're probably more familiar with, like Tesla. And I think just kind of overall, definitely depends on what specifically you're looking at in the different versions and models and trims. But I think just kind of in the general sense, NIOs tend to typically be a little bit cheaper than Teslas, but they also come with worse performance. Again, depending on what you're looking at and which versions. But overall, I think it's not that bad of an alternative option to Tesla. It's definitely not a Tesla killer in my opinion, but just kind of like an alternative option out in that country. And of course, Tesla is the much more well-established company and recognized global brand. So if you're talking about which company are customers going to feel more confidence purchasing from, obviously that answer is going to be Tesla over any other like little startup that is even at risk of going bankrupt possibly. But I don't live out in that country, so I can't really speak much on how consumers out there feel about these brands. But I think, again, just kind of overall, NIO is definitely not a Tesla killer, but more so just kind of a different alternative option out there. Anyway, let's go ahead and talk about the stock now, and let's talk about why it's been crashing over the past year, and let's also talk about why it's been recovering a little recently and what the optimism is about the future that investors have been talking about recently. Okay, so taking a look at the stock, they IPO'd back in 2018, at one point trading for almost $14 a share before falling heavily from there in what has been a very volatile roller coaster ride for the stock, now sitting at just around the $3 range, which is an overall crash of around 75% from those highs back then. And by the way, just in the past year, the stock was even trading as low as about $1 per share, which is pretty crazy to think about. Now, as I've mentioned in previous videos, I did at one point own the stock myself, but I did eventually sell out of my position for just a slight profit, practically breaking even just because it was too volatile and unpredictable for my taste at the time, and already had a ton of exposure to the EV market with Tesla and even the C country market with stocks like Alibaba and Tencent. But we'll talk more about that with my overall thoughts at the end of the video when I give kind of an overall conclusion. In any case, here in 2020, the stock was trading for as low as around $2 a share during the height of the global health issue in the C country, but later climbed by over 50% to today's prices. So why exactly was the stock crashing, and why has newfound optimism been entering the stock? Well, for starters, NIO was always a highly priced stock to begin with. Sure, the individual share price was low, but that doesn't mean that the stock itself was cheap. In fact, the company has never been profitable, losing as much as over 20 billion yuan in 2018 and still over 10 billion yuan last year alone, which is around 1.5 billion US dollars. Now, sales have at least improved, but even on a revenue basis, their price to sales ratio at the end of last year was close to 5. For context, a PS ratio is generally considered good at around 1 or less, but of course it can be forgiven for new companies because they're expected to see explosive growth over the years, which can dramatically lower that ratio. So you kind of give them a little bit of a break there. And thanks to the falling stock price, the PS ratio is now closer to 3, which is a lot more reasonable. Meanwhile, sales are still growing by pretty large rates every year, usually at around 50% or more, but the problem is that they need to be growing at much larger rates to benefit from economies of scale and stop losing so much money that the bears would argue is leading them down the path of bankruptcy. And of course, this year didn't help as most of the C countries' manufacturing was shutting down early in the year to contain the spread. But because of draconian measures used by the country, manufacturing has been able to ramp back up at a time when much of the world still remains shut down. And in NIO's case in particular, they've already started building their new EC6 SUV, although the price of it will not be revealed until July, with delivery starting in September. Speaking of deliveries though, NIO has now started to see a turnaround from the horrible numbers they've been seeing since last year. Back in 2018, their deliveries were soaring up until the start of 2019, where they fell off a cliff, which by the way happens basically everywhere because auto sales are extremely seasonal and typically see a huge crash at the start of every year. But for such a small startup, it was still a bit surprising to see such a dramatic drop because they have so much room to grow. But those deliveries later picked back up again towards the end of the year, thanks to the launch of the ES6, which is in green there on this chart. But even then, year over year numbers were still down, and that bad performance carried on into 2020, which was fueled even further, of course, by the global health issue. Surprisingly, though, that demand skyrocketed after February when the C economy started to come back, and that led to huge sales in April. That saw delivery growth of over 105% month over month and over 180% year over year. And that, coupled with new strategic moves like a partnership with Mobileye, which is a company owned by Intel, to build self-driving systems that NIO will not only use in their own vehicles, but that will also be used as part of Mobileye's robotaxi fleet using NIO vehicles in the future, which could be a huge market opportunity for them, as well as recent funding for nearly $1 billion to make sure that they can keep the lights on and keep growing. Not to mention a recent announcement by the C country that they are extending their subsidy program by a couple years, has all led to investors finding new optimism in the stock. In fact, Bank of America recently raised their price target to as much as $5 a share, upgrading the stock from neutral to buy. I will just note though that the funding deal to raise $1 billion resulted in the local governments controlling about 25% of a new version of the company that NIO is creating with almost all of their assets, leaving American shareholders, for example, with only around 75% ownership of it through NIO. It's still a positive despite the dilution though, because the company was on the brink of essentially going bankrupt as they continue to lose tons of money and have a horrible balance sheet, but a sketchy deal nonetheless. But like I said, they needed the money as they were running dangerously low on cash with nearly $3 billion of debt as of the end of last year. So this cash infusion really helped them keep going until they can hopefully start to tap into those large markets available to them over the long term, which is really what NIO is all about. It's really a long-term kind of speculative story. Here in the short term, absolutely is going to be a very bumpy ride for them in terms of their business, but over the long term, it's the hope that they can start to tap into those really big markets and start to grow at a really fast rate, which, speaking of which, the C country is by far the largest country in terms of EV sales in the entire world. In fact, I think it's even larger than all the other countries in the world combined, according to evvolumes.com. And even when looking at the potential of tapping into ride hailing with the partnership of Intel to do a robotaxi service, the Asia Pacific market is also the largest in the world, and that partnership is also supposed to eventually branch out globally as well. Still, there's many concerns that remain, as you would obviously expect. First of all, we're still in the middle of this global health issue, and while the C country has already started to open back up, there's a very real possibility that consumers will be hesitant to buy luxury cars while the economy is still struggling to recover, which the diplomat points out that because the C country is essentially the supply chain for much of the world, and because the global economy is struggling so much right now, orders are still being cut in the country, and that's leading to less money being generated by the country's consumers, which will snowball into lower consumer spending and consumer confidence. In fact, the country was previously projected to grow by around 6% this year, but economists are now lowering that forecast to no growth at all, basically zero growth for the year. For context, that hasn't happened in the C country there in over 4 decades. Of course, that's if they're reporting honest numbers. Anyway, meanwhile, there continues to be increased competition in the country from well-known companies like Warren Buffett-backed BYD to even startups like Alibaba-backed XPeng, which, by the way, just launched a Tesla sedan clone using NVIDIA's autonomous driving technology. By the way, I also own NVIDIA stock as well. And speaking of Tesla, they're fully on track to ramp up their new Shanghai plant this year and are now selling their Model 3 for around $45,000, but are reportedly planning to dramatically cut that price as they source more parts locally and aim to benefit more from EV subsidies. In fact, there used to be reports that they were trying to cut their prices by as much as 20%, which would make them very affordable, but also highly competitive. And that also doesn't bode very well for a company like NIO, which again might not be a huge issue for them if they can become a decent alternative to Tesla. And I really do think that there is plenty of room in the market to support multiple players. But again, you're still kind of betting on the long-term future of NIO being successful and becoming a profitable company. Okay, with all that said, let's go ahead and wrap up the video with my overall conclusion. And for me, the way I see it, I think NIO remains one of the most attractive spec stocks out there. But I think anybody who is even thinking about buying this stock needs to understand that it is not an investment. It is a gamble. They are currently not profitable and have never been. They continue to burn through enormous amounts of cash every single year. And even when you get some good news about financing, you're really getting diluted as a shareholder with some pretty sketchy looking deals that any of us international investors will never really have any kind of control over, as is the case with most stocks that are out in that specific country. That said, it also remains one of the most interesting and exciting and innovative electric vehicle companies out there with very impressive technology that under the right circumstances would potentially be a decent alternative to something like a Tesla in terms of looking at the vehicles. But as it stands, I already do have a ton of exposure to the electric vehicle market with Tesla, which also gives me exposure to that C country as well. And then speaking of which, just kind of in the general sense, I also still have a lot of exposure to that country's market through other stocks and companies like Alibaba and Tencent. So with everything going on in the stock market right now, I think there's a lot of sketchiness out there. You know, in my opinion, I think the market is being propped up by the Fed and the government while the economy continues to collapse. I'm just not at a point right now where I'm interested in picking up, you know, a very risky speculative stock. I'm not interested in adding even more sketchiness into my portfolio. I'm more interested in sticking to reliable, profitable companies, and especially ones that pay reliable dividends. So even if the stock market continues to be very volatile here going into the next couple of years or whatever, I can continue to collect some dividends as well. So I am taking a little bit of a safer approach than I usually do during these times. And so for that reason, I'm just not in the market for, you know, a high risk spec stock. But if I was, I do think that NIO would be somewhere at the top of the list because I think it is a very interesting company. I'm rooting for them. I hope they will be successful. And I definitely enjoy tracking them. So I will continue to make future update videos for you guys because I think it's a very interesting and fun to watch company and stock. But let me know what you guys think down below in the comment section. Let me know if you're investing in NIO or if you're thinking about it or anything else. Not a stock for me at this time, but I would love to hear your thoughts down there. Anyway, if you enjoyed the video, please consider hitting the like button. It really helps the channel. Thank you so much for watching the video. I hope you're all staying safe out there, both health-wise and financially. I hope you're all doing well, and I'll catch you guys in the next video. Take care. Bye-bye.